Good evening, folks. Welcome to the Weekend Investing Daily Bite of the 18th of September 2025. I'm Parikshit, filling in for Alok, who's away just for today. As expected, Fed did come up with the cut. It was 25 basis points, and primarily the narrative coming in from the Fed has been that it is targeted towards paying attention to the weakening labor market. There has been a lot of noise around jobs, unemployment going to multi-year highs, and there was also a very clear indication that this is not the beginning of a long-term rate reduction cycle. So this is primarily risk mitigation measure. Risk mitigation measure is what the Fed is trying to convey, and markets also uh, came up with a mixed reaction. U.S. markets, particularly, except for Dow Jones, I think the other indices like Nasdaq, S&P 500 were flattish to negative territory yesterday. But despite all of that, despite all of the fears surrounding uh, potential trade wars and all of that has been happening with the U.S. markets, when the news coming in from U.S. especially, the markets have been very very stable. S&P 500. If you just take a look at the broader perspective of S&P 500, it is probably the fifth consecutive month that it has been going up, and this month also looks like a very very solid month. It looks like the S&P 500 is poised to close even this month at with a green candle. So things are looking quite good for the U.S. markets. Markets are always irrational, as we've communicated several times. So just pay attention to the price, and let's move forward on what's been happening. So, uh, of course, disclaimer is here. Please read through the disclaimer very very carefully before you proceed, and of course, subscribe to the channel. This is a request from my side as well. So our team has been putting in a lot of effort trying to give you this content. So please do hit the subscribe button and also click on the bell notification. So where's the market headed? Nifty 0.37% up today. Uh, if you see if you see the 5 minute candle, also 5 minute chart of this Nifty's day performance, you will observe how the open was very strong at about 0.3% up, and then from then onwards, till about 12:30, we could see that the markets were pretty much flattish. But since then, and since the second half of the day, Nifty gradually started coming down. So there was a lot of pressure coming in from the sellers. So of course, we were always kind of expecting some resistance to start showing around these levels, but resistance did come in after these 2 days of spectacular performance. Of course, there was some expectation of sellers to apply some pressure to the markets, which we did see around the second half of today. But the last 1 hour was very very solid. So from 2:30 onwards, we saw how Nifty came back to find some support near yesterday's close, and from there onwards, 2:30 to 3:30 was very very strong, a strong move up. So taking Nifty back to today's open, the slight, you can see you can see how Nifty has closed very very near to its open. So 25,423 is where we currently stand on Nifty. Nifty Junior Index up 0.27%. Nothing much to speak about. 50 next 50 index, of course. After this rally, we did see some sluggishness in this index today, also proving to be a bit dull on this index. So Nifty mid cap index 0.31% up today, again yet again very very similar to Nifty next 50. So a couple of dull outings here for this index as well. Small cap also in line with the other two indices, Nifty Next 50 and the mid cap index. The small cap, in fact, has seen a very, very good run, very consistent run leading up to 17,500 marks. So from there, there's been a little bit of, around this region, there's been some pressure that we can see from the seller's perspective. So, of course, good news is that we are back above this moving average that we track. And hopefully, if we continue to find traction, maybe by Diwali we could see a new all-time high across all of these indices. That is just some guesswork. No need to pay too much of attention to that. So Nifty Bank up 0.42%, back above the moving average as well. So moving on, gold has been making a lot of noise of late after taking support over here at this moving average. Spectacular rally, very very superb rally, taking gold above 11,000 mark. And from there, of course, if the markets are moving up, there will be some pressure on the gold on gold. So gold slowing, showing some signs of slowing down around this mark at 11,000. So let's see how this progress. But today, very good performance at 0.8% at the time of capturing this chart. Let's see if this rally continues or whether there will be some profit booking at some stage. Moving on, we have the advanced decline trends equally split, almost 258 advances versus 243 declines. This also following the same pattern what we discussed about Nifty. So good start followed by some weakness, and again, very very strong pullback as the day progressed. So the heat map is here. So we have the best performer, of course. There's a lot of discussion about Zomato doing really well at 2.92%. We also have some pockets of banking stocks doing really well. SDFC Bank up 1.08%, Axis Bank, Bajaj Finserv doing really well. So primarily, Nifty's performance today is supported by good performance in pharma stocks also. So Sun Pharma, all of these pharma pockets doing really well. We'll see that performance later on, but IT and pharma taking Nifty up is majorly what we can see today. So IT, we have Infosys, HCL Tech, Wipro all doing really well as well. So in terms of weakness, Bajaj Finance, you can see ONGC, Coal India all down. Tata Motors, some very very minor pockets have shown weakness today. Across the Nifty Junior, we have Hyundai doing really well at about 2.64%. L&T is also LTIM is also up 1.87%. Adani pockets have some of the pockets within Adani Energy Solutions up 1.35%. JSW Energy up 0.5%. So some weakness here and there for the Nifty Next 50 index. So movers of the day, we have Bajaj Consumer, phenomenal rally today, 8.59% block. So this is what especially can happen when there is momentum within a particular stock. So as you can very clearly see, there was a very strong move from move right at the end of around the end of June, taking the stock all the way from 160 odd levels to almost 230 odd levels. From there, of course, there was this profit booking session. So pole and flag kind of a pattern emerging here, and from here yet again a very very strong break on the upside. So taking further to 250 odd. So splendid rally from June, going all the way from 160 to 270. Solid performance here. 52-week high achieved as well. So sectoral trends, what we can see is, of course, Pharma and IT leading the pack today. 1.5% gains on Pharma, and Nifty IT is up 0.83%. Services sector is up 0.56%, followed by financial services and the private banking space. So defense, energy, and media pockets were the weakest counters today, recording between 0.3 to 0.5% losses. If we go to the sectoral chart, of course, pharma is the best performing sector today. Pharma gradually looking to recover from this early slump, going all the way till about 22,574 currently. And most importantly, if you see, pharma is trying to establish itself around this moving average. So Biocon, Natco Pharma, Glenmark Pharma, Mankind, Lotus Labs, all leading the pack with very, very good performances. So moving on, instead of the tweets of today, which Alok is better off sharing, I thought I'll give some global context. We've been putting in a lot of efforts around sharing global context. So this is data point. These are data points that are not available, very frequently. You don't see such analysis coming out very often. So the context that we wanted to showcase is, of course, if you a lot of people would directly compare S&P500. If you wanted to compare US markets with Indian markets, the simplest thing that you will often see is that people will compare Nifty with S&P 500 and come to a conclusion that Nifty has beaten S&P 500 across a particular time frame. But you have to take currency depreciation into account. So when you adjust Nifty for currency depreciation, which is you divide Nifty by USD INR, you will notice that accounting for adjusting this for the currency depreciation, Nifty has only returned 157%, whereas the actual Nifty has returned 279%. So when you take this also into perspective, it will be very clear where things stand. So this is how you do an apple-to-apple comparison. And just comparing Nifty with S&P 500 is not an apple-to-apple comparison. And that is exactly what we have incorporated in our weekly analysis. So this is going to be a weekly analysis that we'll be doing. So if you see, this is the performance of all the major global indices across multiple time frames. This is something that we've added to the weekly review that goes out on each Saturdays at the noon around 12 p.m., 1 p.m. So you can take a look at that. So what we can see here, when adjusted for their currency. So when every single index is basically denominated in dollar terms, as I mentioned for Nifty, every other index is denominated in dollar terms. So based on that, this is the performance. So Brazil has been very strong at 2.9% in the last 1 week. If you just go to the 1 month performance also, Brazil leads the pack at 7.2%. China has been the number two at 6.1%. And if you see here, Canada is also doing well at 5.3%, 4.9%. Let me just directly go to the 1 year performance, right? China has been the topper at 50.6% gains. And if you see, India is down 6.5%. Nifty 50 is down 4.8%, and Nifty 500 is down 6.5% when you adjust this to USD, right? So that is where we stand currently. In fact, Nifty is the weakest. When India is the weakest performer last 12 months. But if you see the longer term context, you will get a very clear picture as to how Nifty has been, how Indian markets have been very, very strong compared to the global counterparts. And some profit booking is always par for the course uh, when you especially look at the shorter term time frames. So China, if you see here, is at about 1.6%, whereas Nifty has delivered a phenomenal 15.5% CAGR. And this is one chart, and the other chart that we've come up with is the sectoral momentum charts. So that is also available for you. So this is how we've stacked up the performances of all the global momentum chart, rather not a sectoral chart. We also have the Indian sectoral chart and the weekly review. This is the global sectoral, global momentum chart, which will give you a very brief idea about how the global indices, how various countries' indices have been performing across several time frames. So which one is ranking right on top, which one is at the bottom, which countries are recovering, which countries are slipping away from the rankings. For example, here you can see how the last 1 year Brazil was right at the bottom, the 10th ranked, but very, very sharp uptick in Brazil performance here, first ranked across the last 1 week, and first ranked across the last 1 month. So very good recent performance. But you see how Canada has been slipping away. USA also has been slipping away, and India is almost at the bottom. But India is showing some signs of recovery. Let's see how that progresses. So that's it for today's Daily Bite. Thank you so much. I'll see you on the. Alok will basically see you on the story later. So thank you so much. Have a nice day ahead. Bye bye.